I think investors have to stare in the face of a new overhang on the stock. It's not necessarily new that there are regulatory pressures, constraints facing Google, but they became more material, more real earlier this week. And now we're going to have uncertainty. And the uncertainty is, are we going to end up with a fine of a couple of billion in cash taken out of Google? Or are we going to end up with a required change in business practices that could reduce Google's ability to monetize all those searches it gets? So we've got uncertainty. It's going to probably limit the multiple at which the stock can trade. I think the statements coming out of Europe are that they expect to resolve this particular case. This is just the Google comparison shopping case before the end of the year. Then the question is, are there going to be other investigations into Google's Android policies, its mobile platform policies, into a couple of other elements of the business like maps, reviews, travel. So this case itself may be time limited to just this year. What's unfortunate for Google and maybe for shareholders is that if it's resolved negatively for Google, it'll probably embolden other cases, in which case we could be dealing with a multi-year overhang. We have an outperform rating on Google, 630 price target, using approximately a 19 to 20 PE multiple on our estimates for next year. If the market's trading at 17 times next year's earnings, Google probably deserves a modest premium to that. It's probably not going to get a major premium as long as this overhang is in the market, unless there's something that comes in from a stock picker's perspective and counterbalances that, and that would be a material share buyback or a implementation of a dividend.
Hey YouTube fans, I'm Landon Dowdy from CNBC. Thank you so much for checking out our channel. You can subscribe by clicking right here to check out the latest Mad Money CEO interviews, market news, financial advice, and product unboxing. Enjoy!